Markets heading back up to highs again. No report will stop the pump. I'm Darren, and this is 3 Things for Thursday, August the 22nd. Many U.S. workers are worried about losing their jobs. At the same time, over 28% of the job force is looking for a job. That is the most in 10 years. Workers in this survey by the Fed Reserve Bank of New York say they are less satisfied with compensation and promotion opportunities than the same time last year. Ford has now scaled back its EV push as it still loses over $44,000 per each EV car made. They have dropped making a 3-row electric SUV as well. They are, however, going to expand their hybrids and will continue with its battery plant construction boosted by the Inflation Reduction Act. The FTC's non-compete agreement ban has been blocked. The ruling judge says that the ban is too broad and could cause irreparable harm. This now keeps the FTC from blocking non-competes, effectively canceling the temporary injunction from last month. Trade while you're sleeping across time zones with Arbitrage Trade Assist. Sign up today at arbitragetrade.com. Arbitrage Trade is your trusted source for business, finance, and tech info.
Teen depression. A lot of kids are dealing with it today. So what's behind it? A relationship goes bad. Getting bullied. Maybe there's no reason at all. Whatever's behind it, teen depression can be overwhelming, but it doesn't have to stay that way. If you're feeling off your game right now, it's time to jumpstart your comeback. Time to take charge and take the first step. Visit yourlifeyourvoice.org. Make your move.
Leveraging game theory and gambling strategies for smarter trading and investing. Daniel writes, in the world of trading and investing, the line between strategy and speculation can often seem blurred. However, by borrowing techniques from disciplines such as game theory and gambling, traders can enhance their decision-making processes, manage risk more effectively, and improve their overall performance. One such approach is the Kelly criterion, a formula that helps traders determine the optimal size of their positions. In this blog post, we'll explore how game theory and gambling strategies like the Kelly criterion can be applied to trading and investing to gain an edge in the markets. Game theory is a mathematical framework used to analyze strategic interactions where the outcome for each participant depends on the actions of all involved. In trading, game theory can be applied to understand and anticipate the behavior of other market participants, such as competitors, institutions, or even entire markets. By viewing trading as a game where each player seeks to maximize their payoff, traders can make more informed decisions. One common application of game theory in trading is through the concept of Nash equilibrium, where no participant can benefit from changing their strategy while the others keep theirs unchanged. For example, in a market with multiple players, a Nash equilibrium might represent a price level where buyers and sellers are in balance. Understanding where these equilibrium points lie can help traders identify when the market is overbought or oversold, providing opportunities for entry or exit. Another game theory concept relevant to trading is the prisoner's dilemma, which illustrates how individuals might not cooperate even when it is in their best interest. In financial markets, this can be seen in situations where traders might engage in panic selling during a market downturn, even though holding might be a better long-term strategy. By recognizing these dynamics, traders can position themselves to profit from the irrational behavior of others. The Kelly criterion is a formula that originated in the world of gambling but has been widely adopted by traders and investors to determine the optimal size of a bet or investment relative to the total capital. The formula is designed to maximize the expected growth of wealth over time while minimizing the risk of ruin. In the context of trading, the bet can be thought of as the size of a position relative to the trader's total capital. By using the Kelly criterion, traders can determine how much of their portfolio to allocate to a particular trade, balancing the potential reward with the risk. To apply the Kelly criterion in trading, a trader needs to estimate the probability of success, in other words, the likelihood that the trade will be profitable, and the potential return if the trade succeeds. For instance, if a trader believes that a particular stock has 60% chance of increasing in value and the potential gain is twice the potential loss, the Kelly criterion would suggest allocating 20% of their capital to that trade. It is important to note that while the Kelly criterion can be a powerful tool for managing risk, it assumes that the probabilities and returns are accurately estimated, something that can be challenging in the dynamic and unpredictable world of financial markets. Therefore, when many traders use the fractional Kelly approach, where they bet a smaller fraction of what the Kelly criterion suggests to reduce volatility and the risk of large losses. Other gambling strategies in trading: the expected value, or EV. In gambling, the expected value is a calculation that shows the average amount one can expect to win or lose per bet. In trading, expected value can be used to assess the probability of a strategy over the long term. In trading, the expected value can be used to assess the profitability of a strategy over the long term. A positive expected value indicates a strategy that should, on average, generate profits. There's also the risk of ruin. This is a concept from gambling that assesses the probability of losing one's entire bankroll. In trading, it can be used to evaluate the risk of a strategy leading to significant drawdowns or complete loss of capital. Managing the risk of ruin is crucial for long-term survival in the markets. Then there's the martingale strategy, which is a betting strategy where the gambler doubles the bet after every loss, aiming to recover all previous losses with a single win. In trading, where the pure martingale strategy can be dangerous, a modified approach, like scaling into positions during drawdowns, can be used cautiously to enhance returns. Trading and investing are as much about psychology and strategy as they are about market analysis and technical skills. By integrating concepts from game theory and gambling, such as Kelly criterion, traders can gain a deeper understanding of market dynamics and manage risk more effectively and potentially enhance their performance. However, it is crucial to apply these strategies with caution and discipline, as financial markets are inherently unpredictable and no single approach guarantees success. Ultimately, the key takeaway is that trading, like gambling, involves making decisions under uncertainty. By adopting a strategic mindset and leveraging mathematical tools, traders can tilt the odds in their favor and navigate markets with greater confidence. Stop watching, start living using Pips, our AI bot. Go to arbitragetrade.com and check out Arbitrage Trade Assist.
Why was the basketball court all wet? Because the players kept dribbling on it.
The dad joke. Corny, groan-worthy, but also one of the simplest ways to share a moment with your kids.
What did the buffalo say when he dropped his son off for school? Bye, son.
So take a moment to make your kid laugh, because dad jokes rule. Make your kid laugh today. Go to fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Pips Pick of the Day, and it's Throwback Thursday. I give you a pick of the day every Monday through Wednesday, and then on Thursday I review AI bot Pips Wins. Pips makes it easy for me with his 12 indicators. This week we are celebrating Upland Software. They're headquartered in Texas, and they provide cloud-based software applications. UPLD was chosen as the pick of the day Monday and opened at $2.12 after a green arrow up indicator appeared the previous Friday. Both the compass and momentum line continued upward on Monday, and the price rose. Yesterday, the price hit a high of $2.31, which represents a 9% increase from opening Monday. Nice work for 2 days of work, Pips. Want to see the graphs and 12 indicators? Look for my video post about Throwback Thursday on social media, where I break it all down. Put our AI bot Pips to work for you with Arbitrage Trade Assist. We're not financial advisors, but we do offer a service at arbitragetrade.com.
Arbitrage Trade Analytics LLC is a privately held research company. Arbitrage Trade Analytics LLC is solely responsible for the preparation and distribution of the contents of this podcast. The opinions offered in this podcast are for informational purposes only and are not intended to function as investment advice. Seek a duly licensed professional for investment advice. For more information about the informational research and services offered by Arbitrage Trade Analytics LLC, please visit arbitragetrade.com.